Hello and welcome to our first video on this new Trading for Beginners YouTube channel. My name is Rauchenwald, and among other things, I'm a popular investor on eToro. Now in today's video, we are going to take a closer look at GameStop, a stock that has been in the news and in pretty much every medium you can think of because of the short squeeze that happened or did not yet happen during the last couple of weeks, and the hype around the Reddit community called Wall Street Bets. Now with that, let's jump into the analysis of GameStop and what I think most people overlook when they currently look at GameStop. I've currently opened up the GameStop daily chart, and we can see that during April 2020, so thanks to COVID, the stock pretty much dropped to as little as $2.57 per share, mostly because there have already been people shorting the stock and betting against the company. And since then, it's basically been more or less a quite steady recovery journey with interesting bumps or squeezes or rallies here during October, and most recently here in January, and what we've seen at the end of January till 1st of February, where people already say this here is or was the short squeeze. Now, personally, I disagree with the statement that this is already the short squeeze, and I think we might see the actual squeeze happening in the future. But it's also possible that we don't see it, and it will be a slow upwards journey along the way. Now, why do I personally think that this is not the squeeze and that there is yet more to come? One of the numbers I'm looking at is the NASDAQ website, and there when we look up GME, so GameStop, we can see that according to NASDAQ, 111.98% of all shares are owned by institutional investors. So not the average retail investor like you and me, but actually big investment firms. Now, I do not know how often that percentage here on the NASDAQ website gets updated, but I was lucky enough to find a screenshot showing real-time Bloomberg trading terminal data from Friday, so the last trading day before recording this video. That shows that institutional investors actually hold 177% of shares available. Now, obviously, you may be wondering how it's possible that there are more than 100% of shares available in circulation. And it's quite simple. Think of it this way. If you own 100 shares, and that's the total supply of the stock, and I borrow those shares from you or your broker to short them, which means I borrow them to sell them at the current price, and then somebody else buys them. So although there are only 100 shares in existence, the total volume that's circulating would be 200 because you are holding 100, I borrowed them and sold them, and somebody else bought them and also holds 100. So we have 200 shares circulating. But why is that important? It means if you think about it, in order for me, so I'm the one that shorted the 100 shares, if I want to close my position, either because the price moved up against me and I want to cut my losses, or because I want to take a profit, I need to buy back those 100 shares. And now let's assume the person that bought them from me doesn't want to sell because the price is moving up, and they don't want to sell the shares because they think it will go up further. So I will have or would have to bid more, be willing to pay more per share to get them to finally sell, which means that would be actually the situation of a short squeeze where the shorts have to cover for any price. Now, obviously, as long as I have money in my account, so I can pay the interest to you or your broker for borrowing the shares, and I also have enough money that I could theoretically close my positions at the current price, I can just keep my short position open and wait for the price to eventually drop. But if that never happens and the price keeps going up, which means I need more money in my account to just keep my positions open, and I'm losing money every day paying interest to you or your broker, then eventually I will get a margin call from my broker that says, okay, now you're out of money, you don't have enough money to cover the position, we're forced to close it now at whatever price is possible. And then again, if you or the other party that are holding shares, you actually hold the original shares and the other party bought them through me shorted, are setting their sell limit orders or that take profit at $5,000 per share, in the case of a margin call, my broker doesn't care. He buys the shares for whatever price is available. So if the cheapest share available is $5,000, he would buy them for $5,000, and I would be the one owing a lot of money. Probably would have to declare bankruptcy and so on, but that's a different topic. So we see that that number here is already significant because it indicates that the stock is still heavily shorted. If we jump to another source and here go to FINRA, which is basically the source that all other platforms use for short interest reportings, we can see that their latest reporting shows 226% short interest. So the stock is heavily shorted, although that number hasn't been updated in a couple of weeks and will be updated tomorrow. So tomorrow, to be more precise, on the 9th of February, it will be an important day because we will see how that number changed. If the stock is still heavily shorted, 100%, 150%, or still 200%, then we know that the short squeeze is still on the table and that what we've seen so far here, so the rise up here and then the fall, has not been the actual short squeeze, and that getting in on the current price level, so around let's say $50 to $75 per share or even $100 per share, would still be a smart play because the short squeeze would still be on the table. Now, personally, in my opinion, I think buying GameStop right now still makes sense even without the short squeeze, because although their retail sales went down and they made losses last year, but with the new management, they actually started to shut down stores that don't perform well and not renew their lease. They focus more on e-commerce. They made a great deal with Microsoft and are, as far as I know, the only ones that have a revenue share agreement with Microsoft when it comes to selling Game Pass memberships and so on. So I think the company is in great hands to have a great turnaround. And just last week, they announced that they filled 3 new key positions as CTO, so Chief Technology Officer, somebody for fulfillment, and somebody for customer service. And all those 3 positions got filled from bigger companies. Like their CTO left Amazon to jump into GameStop. And personally, if I would have a good position at Amazon, I wouldn't leave it for GameStop if I wouldn't believe that the company has a bright future. It looks to me like there is some talent that got recruited into GameStop now that sees that with GameStop, they get in on the ground floor and have a very bright future ahead. Whereas if they stick with Amazon or wherever they worked before, they would have a slower growth personally. But that's just my opinion. That's, as always, not financial advice. So besides the short interest, where we'll see an update tomorrow that will be very crucial for my personal decision if I keep holding GameStop, if I sell my position or close my position, if I buy more, or if I partially sell it. There is also another source that we can look at, and that would be Fintel. And here we can see, although I'm not a subscribing member, for GameStop, as you can see here, GME GameStop Corporation, if we scroll down to the second table, we can see recent institutional transactions, and we can see that there are overall more purchases of shares by institutional investors than there are sales. If we look here, so just from February, where does it start? Here we have the 1st of February, so here it starts. We have a sale of 17,000 and here 1.2 million, but that was the 1st of February, and another 100,000, so let's say 130, 140,000. Then here we have 100,000 shares purchased, another 100,000, and so on. Here 1 million shares almost, another 100,000, and so on. And the list continues, 120,000 shares, and so on, until recently on Friday we have BlackRock Investments that bought 9 million shares, so increased their position further to own more of GameStop. And all those institutional investors would probably not jump in at this low price if they would believe that the stock will plummet to $20. So if we look at the changes in institutional holdings, we can actually see that the numbers are increasing, that more institutional investors keep buying up shares. And most of them are not going to day trade them, but actually probably plan to hold them for a certain period of time to make a long-term profit. So you see, those are the numbers that I personally placed my GameStop trades on. So even if there's no short squeeze happening during the next days or weeks and the stock simply just goes sideways and so on, I still expect it to grow up and grow in value over the next few years when the new management is able to adapt most of its changes and strategies. And finally, we have less COVID restrictions, so the brick and mortar stores of GameStop also can start making more revenue again. And then I'll probably look at a decent profit over a 1 year, 2 year, maybe 5 year period, which is also fine with me. So even if tomorrow's FINRA numbers report a lower short interest, it's up to you to do some more digging and research and make up your own mind. Now, I hope you were able to take something away from this video. In the future on this channel, you're going to see a lot of portfolio reviews of my own positions and what I'm going to invest in and what I'm keeping an eye on. But currently, with all the GameStop hype and all the wrong information or just opinions, without facts that are thrown around, I figured it made sense to start this channel with a video about GameStop, providing you with some facts that you might have missed and pointing out what's my personal opinion. Now, last but not least, again, this whole video is not financial advice. It's my personal opinion. You have to do your own research and make your own decisions. And obviously, do never invest money that you cannot afford to lose. And don't put all your eggs in one basket unless you know what you're doing or unless you're willing to lose all your eggs at once. Thanks for watching. Don't forget to hit the subscribe button. If you have any questions whatsoever, or you disagree with parts of the video, or you have better or more updated sources, please leave them in the comments down below. See you in one of my other videos in the future. Till then, bye-bye.